Hello, today is Tuesday, August 4th, 2026. Here is your daily signal. According to Fortune, major oil companies Chevron and ExxonMobil have posted record profits this quarter, with Exxon's income surging and Chevron reporting its largest quarterly profit ever in the wake of renewed conflict involving Iran. Iran remains a critical oil producer in the Middle East, supplying approximately 4% of global output, and the escalating tensions particularly around the Strait of Hormuz have historically triggered pronounced swings in oil prices that reverberate throughout global energy markets. International sanctions and past disruptions have set the precedent for volatile price movements, and recent events have only amplified uncertainty. Global oil prices have jumped 4% following the latest Gulf region flare-up, pushing Chevron's Q2 profits up by 8% and ExxonMobil's by 11%. Shell, meanwhile, has responded to heightened risk by temporarily halting shipments through the Strait of Hormuz. Key players like Iranian President Ebrahim Raisi and U.S. President Joe Biden, alongside OPEC and the IEA, are closely monitoring the situation. In the near term, expect oil prices to remain elevated, placing additional burdens on consumers and transportation. Longer term, sustained supply chain disruptions could force oil giants to rethink their investment strategies, and the geopolitical risks may spark a new wave of energy security measures and increased focus on alternative energy sources. Next, let's turn to India, where inflation has become a pressing concern. Bloomberg reports that Indian companies like ITC, Dabur, and Tata Consumer Products are planning fresh price hikes as consumer prices surged above the Reserve Bank of India's 4% target for the first time in 18 months this June. Behind this, the inflation rate has climbed for 8 consecutive months, reaching 4.38%, fueled by rising food and fuel costs. The ongoing U.S.-Iran conflict, global commodity spikes, and erratic weather including El Niño currency sign O and weak monsoons have all contributed to increased volatility and rural distress. India's dependence on fuel imports, which account for nearly 85% of its needs, leaves the country especially vulnerable when supply routes through the Strait of Hormuz are threatened. Indian wholesale price inflation hit 9.87% in June, as reported by Economic Times, with consumer inflation moving up from 3.93% in May to 4.38% in June, partly due to the ripple effects of war and adverse climate. Companies such as Adani Wilmar, Parle, and Blue Star continue to warn of cost pressures, signaling more price increases ahead and flagging weakness in discretionary and rural spending. The Reserve Bank of India is keeping a close watch and may consider further policy rate hikes, which could slow economic growth. Persistent inflation could force government intervention, impact fiscal planning and subsidies, and escalate instability in food and fuel prices well into next year. Our final topic today concerns the economic impact of open source AI on proprietary business models. Next Big Future notes that open-source AI models, such as Meta's Llama and Mistral's Mixtral, are reshaping the industry by making advanced AI capabilities broadly accessible, dramatically lowering barriers for startups and established firms. Historically, proprietary models from OpenAI and Google Bard have dominated the commercial space, with growth tightly controlled and monetized, but the rise of open systems since 2020 has fueled rapid innovation and new entrants. The Verge reports Meta's Llama 3 open-source model has now seen over 2 million downloads, turbocharging enterprise adoption and competition. Bloomberg highlights Andreessen Horowitz's new $500 million fund dedicated to startups building on open-source AI, signaling a clear market pivot. TechCrunch adds that Hugging Face has doubled its enterprise customer base in Q2 2026, thanks to customizable open models for automation. Proprietary companies including OpenAI and Google are likely to see reduced licensing revenue as businesses move toward lower-cost solutions, and more flexible product cycles enable startups to flourish in less regulated or niche arenas. Regulatory bodies such as the European Union are also monitoring this shift, with potential for new guidelines around transparency and copyright. Medium term, traditional software vendors may need to adapt by offering new value-added services atop open-source platforms as the industry landscape continues to evolve. Now, onto the markets. International equities mostly traded higher, with Germany's EWG up about 1.2%, while Italy also posted gains around 1.3%, and France showed firm momentum at nearly 1.0% for EWQ. United Kingdom struggled, slipping slightly by 0.4% with EWU as one of the laggards, and Belgium's EWK also fell about 1.2% to the downside. Within Asia, India rose 0.7% as India ticked higher, while Taiwan outperformed with EWT gaining 1.5%, but China large-cap FXI was little changed. Commodities saw mixed moves. Gold held steady near flat with GLD, and silver inched up by about 0.2% for SLV, while U.S. oil dropped sharply by over 5% with USO despite strong month-on-month performance. Copper edged up slightly through CPER, and uranium saw notable strength with URA up more than 4%. In the S&P sectors, the overall SP 500 index advanced roughly 1.4% as SPY led, while finance moved up 0.8% with XLF, and healthcare dipped marginally. Semiconductors remained steady, seeing a slight 0.5% gain for SOX, and clean energy rebounded 2.4% via QCLN after recent weakness. Among favorites, Microsoft surged nearly 5% as MSFT outperformed, while Amazon climbed about 4.6% and Nvidia advanced over 2.9%. Apple slipped by nearly 1.8%, making it a notable laggard within large-cap tech. That's it for today. You can find more news and details on our website. Goodbye.